Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back for another brand new episode of WSI TV. I'm Jordan Bishop and I'm here with Jim Sampson.
Hello.
Now before we jump into today's content, first I need to tell you to visit WSITV.com, go sign up for our free daily newsletters, and you'll also get access to the WSI Vault for free. A lot of great stuff in there. But let's jump into what we're really talking about here. And today's sort of topic is being the best trader you can be. We're going to talk about a few market indicators we've been looking at lately. But Jim, how important, and we're not really talking about stop losses here, but how important is cutting out your losers and getting more winners into your portfolio?
It's everything. You have to ride the winners as long as you can. You have to cut the losers as early as possible. Think of it as gardening. You know, most people do the opposite of this. They'll keep their weeds and then throw out the flowers. Right. Just because your winning stocks and when your trades, they're the ones you're going to hang on to. As long as they're going up, just leave them in there. The losers, you know, if they've hit the stop loss, get rid of it.
And what's great about what we're talking about today is we're almost going to time travel here. So we're going to do something that's very important as a trader, is go back to every trade you've had. Because every trade's a lesson, whether it was a profit or a loss. And obviously ask yourself what went wrong or right. I mean,
and that's a hard thing to do because nobody likes to admit their mistakes, let alone, you know, go back and revisit them.
Right.
But if you do that, just look at the ones that lost. Try and put yourself back there and look at the things we're teaching, like some of the charts and stuff like that, and you know what were the. I mean, it's not always. Sometimes even when you've got all the ducks in a row, it's still no guarantee it's going to go your way. But if you go back and see, oh, okay, I missed something there. You've paid for the education. Right. You know, don't waste it.
Exactly. And it's funny. I mean, I can be extremely stubborn when it comes to my trades. I mean, I just look at those charts and I absolutely hate them. You feel this pure rage at this chart.
It's instinctive to want to just sweep it under the rug and just move on and just not have to, you know, but it's sort of, like I say, that was education you paid for.
Exactly. I mean, and oftentimes too, when you look back at the charts, you'll think, how did I miss that?
Yeah.
That was exactly
the power of hindsight. And before you go into any new trade, try and get that power of hindsight now. And say, imagine it did lose. Imagine this. We haven't got into the trade yet, but we're looking at a trade setup, and just think it bombed. Now use that power of hindsight. Today, what did I miss? What am I missing?
Right, and if you train yourself well enough, you'll be able to see those things, those, you know, whatever it is, maybe it's one of the secondary indicators we're going to cover in just a second, it'll be popping out at you. Now, of course, as you guys know, we like a good drink around here when we celebrate our wins.
That's fine.
I mean, the bartender's off today, I guess, that's okay. I will say when you're executing the trade, and it's sort of fitting here because we're talking about executing, make sure you haven't had too many whiskeys there. Make sure you save them until you celebrate that profit, because that will skew your vision completely.
Yes, don't let we're not leading by example here. This is the drink for when you've got a successful trade, or the trade is on.
Exactly.
And you're trying to stay calm.
Which is why we don't have drinks right now, because we're talking about executing.
Execution, that's time for soda.
I mean, many times we look back and we think, how did I miss that? The question might be, how many whiskeys had I had?
Maybe, I mean, you know, we have this sometimes where, depends if you're drinking in a good mood, and in a party mood, then it's like, put that trade on, put this trade on, and another allocation for that one too. Well, I'm at it for good luck.
Exactly.
No, you're now in the casino trap of just party trading.
Exactly. That's why the casinos feed you drinks when you're sitting at the tables. You know?
Absolutely.
So, but you know, enough with that. So make sure you're clear on your trade when you're opening it. And there's some things that you should be looking at here. You should, of course, always be flowing with the tide, but you also want to be flowing with the currents within that tide, right?
So the analogy I use is this, right? When you go back and look at these trades, I want you to now look at it. Were you aligned with, I'm calling the tide and the current, right? So imagine your individual trades, your stocks that you own, whatever, are like ships, nothing more than little ships on this ocean. And as you know, these ships are at the mercy of the sea. Think of the tide tide comes in or goes out. You know, if your boat, you know, your boat is there in the wrong place when the tide goes out, trust me, because I've been close to that with my boat, is you'll just be beached, right? Most important thing of all. And by the tide, we're talking about, are we in a bull market, or are we in a bear market, or if right now we're in cash, we're in what we're calling a fox market.
Right.
So that's the tide. And then, but assuming, okay, the tide is in, let's say, bull market, okay, good. But now there's something else, because if we look at, say, a chart of, say, the last few years, you could see pretty much like a bull market, kind of pretty much upwards like that. But of course, stocks don't go up straight lines. So within that within that tide, there are currents, and up and down, up and down. And these currents are very, very powerful. So it's important to be aligned with not just the tide, are we in a bull or bear market, but also this week, with all this month, what is the short-term trend, what we're calling the secondary trend, doing? Right. Because that can capsize your ship. Yeah. You know, we could be great. We're in a bull market, so I'm going to buy this stock in a violent correction within that bull market. That trade's going to get stopped out every time.
Right, exactly. So speaking of secondary trends, I mean, we're not going to get too technical here, of course, but what secondary trends should people be watching? Let's just look at the S&P 500, right, you know, which I actually have a chart here. So this is the basic S&P 500, just to exemplify the tide, right? Right. So what is the tide telling you right now?
So what we can see right now is we've got this uptrend which developed off of an oversold condition around Christmas time, actually, and we're seeing that trend hasn't broken, so we don't want to fight the trend. Right. The short-term trend, this second to current, if you like, is still locked into that upwards trend, albeit within a neutral tide, fox market. Yeah. Short term, if we're trading at all within that fox market, we don't want to fight the trend, and that trend is undoubtedly up right now. Right.
And of course we are in cash right now, but the premium subscribers will know we are carefully placing trades that are, you know, flowing with the tide and the current. We opened one the other day, and Penny Stock Launchpad is up 15% already.
Brilliant. So this is a classic scenario. Sorry, just the contradictions you can get. Right. So it's not, this is on a long-term scenario, it's a pretty ugly chart, which is why the thing's sitting in cash. Yeah. But short-term, it's up. Right. Yeah. So we can make those short-term trades, but of course you have to be very careful, and you have to have that experience trades are short-term.
Exactly. Yeah. So that's the tide right now. Let's talk about the current and what we're watching for the current. Now I have the RSI, the Williams percentage R, and OBV on the screen right now for the S&P 500 on the daily. So what is this telling you right now?
So at the top we've got the relative strength indicator, which is at a percentage scale, where this kind of just tells you how healthy are things, and also what's the trajectory of things, helping you understand that trend. And we can see that RSI is in a very concerted uptrend, and the RSI is confirming what we're saying here, is that thing's pushing, grinding higher. We also see from this percentage R, which is in the middle there, that in the shaded green area like that means it's also running quite hot. It's a very overbought kind of situation, but it's been overbought for weeks and weeks now, and that hasn't stopped it. That alone is not a reason to say it's going to go down. It's just saying it's overbought, but hey, it doesn't care. The trend is intact, which is what the RSI was telling us at the top. At the very bottom there, we've got something called on balance volume, or OBV. We see that on a day-to-day basis, just go back to the daily chart 1 second, John, you see that the histogram here at the bottom, that's just day-to-day volume. OBV, on the other hand, is showing you, on balance, what's the kind of average volume Trump doing there. And we can see, again, there's a very strong uptrend that's not betraying what we're saying here about what the price action is saying, which is this thing's in an upwards trend. The volume is there to back up. Now, if we saw that OBV rolling over, leveling off while the uptrend was going on, like we did in September, then we can say, okay, this uptrend might be about to break. So it's a very good secondary indicator to confirm, you know, what is the current right now within that tide.
Right. So it's fair to say right now the tide and the current on the S&P is looking pretty healthy.
The tide is fox, cash, neutral, but if you're going to trade, we're looking at up trades,
I mean, like the fox, we're looking for small rodents that we're going to go take hold of, and
hit and run here and there, and right now it's upwards.
Exactly. So that's it for you today, Jim. Thanks for joining me.
Thank you for coming, and
we'll see you next time. Bye.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant